So first, an issue with global consequences. I'm talking about the FATF Travel Rule, a regulatory standard that has posed daunting operational challenges to the crypto exchanges around the world. And we've got a deadline looming next month for countries that belong to the FATF to put this into practice. Joining me and Teana to discuss this, we have three guests, all members of a working group tackling this thorny problem. And Teana is going to introduce them.
Great. Yes, we are very delighted to welcome Siân Jones, partner at XReg Consulting. Welcome, Siân.
Hello there, and thank you for having me on here.
Oh, it's great to have you. Malcolm Wright, Chief Compliance Officer at Diginex. Hey, Malcolm.
Hey, Teana. Really good to see you again, and thanks very much for having me as well.
Thanks for coming. And Chris Gscwend from the legal powerhouse in Switzerland, MME. Hi, Chris.
Hi, thanks for having me.
So let's dive right in. Malcolm, I want to address an elephant in the room, and that elephant in the room is privacy. So the travel rule says that in addition to KYC, which I think most crypto users are familiar with, in addition to giving your own personal details to the crypto exchange where you buy or sell Bitcoin, Ether, whatever, that if you send that crypto to another exchange, to a friend of yours or a counterparty or whatever, at another virtual asset service provider, as the FATF poetically calls it, that not only does the exchange need to know who you are, but they need to know exactly who you're sending it to, and they need to send your details over to that other business. So now instead of trusting one third party to safeguard your personal information, we're doubling the exposure here. So the question really is, what's going to protect users from a data breach now that they've doubled this exposure, Malcolm?
That's a very good point. Thanks, Mark. I think the thing that we need to look at here is you're correct that the information, so if you were sending coin to somebody, then tokens to somebody, that does mean that another exchange will have your information and potentially can then look at your transaction history associated with that. This is where the virtual asset service providers, or VASPs, will have to pay a lot of attention to the way in which they interact with other VASPs. So as Diginex, for example, we may look at other exchanges and say, okay, are we willing to exchange our customer data with those exchanges? Are we sure that those exchanges have got the right privacy controls in place, the right security, access controls, and so forth? And this is something that we've actually been discussing in the working group that was mentioned at the top, is looking at exactly this problem, which is, okay, how do we ensure that there's best practice? How do we ensure that there's a level setting of, okay, if I'm going to work with a counterparty, that counterparty does have really the right controls in place to make sure that if I'm sending my customers' data to another exchange, that exchange is taking good care of it, that there's proper controls, there's proper segregation from their own main exchange, so that if their own main exchange is compromised, at least that data is secure, that it's secured properly on the whatever data file or data storage is there. All of those types of things are going to be very, very important in this new world as one VASP looks to trust another, and how those relationships are then going to be built.
Thanks, Malcolm. Siân, let me turn to you. So the travel rule requirements really mirror the Bank Secrecy Act. And when banks were asked to share this information, they had infrastructure in place to be able to do this. So did FATF consider technically how they expected virtual asset service providers to be able to comply with this new rule?
Actually, that's a very good question, because when FATF started deliberating on its clarification that eventually meant that virtual asset service providers and virtual assets are brought into the scope of their standard recommendations, the baseline, if you like, that applies to the traditional financial world and others. It was astute enough to pick up on, it's different. It's not the same. There aren't the same ways in which you can append this required data about who's originating a transfer and who the intended beneficiary of that transfer might be when that happens between institutions. They understood that the differences in blockchain meant that the value was likely to have to travel separately from the information that they required to travel as well. And so they engaged very much with industry to at various levels to try and bring industry on board to work out its solutions, just as the banks had done 40 years ago with SWIFT, when there was the issue of using computers to transfer traditional value, and later on, probably 15 to 20 years ago, when the first elements of this regime applied to banks, and about 10 years ago when the travel rule became, as we know it today, for financial institutions came into place. So, yes.
Okay, so let's talk a little bit about the technical standards. So for those who haven't seen your announcement, this working group, co-led by you, Siân, and Malcolm, have just published the final draft of that technical standard work that you've been working on. So Siân, I know from personal experience that coordinating across competitors can be quite challenging. So how did the working group go about doing this, and what's next for you guys?
So I guess the idea of developing a standard for the data model, so that we're talking there about a standard for the definition of the required data, not the method by which it transfers from one VASP to another, the technical means by which information is transferred, but the content, the data payload. That really was born out of ideas that Malcolm and I separately at the same event put across at the V20 last year in Osaka. And subsequently, we were able to get the three leading industry bodies, Global Digital Finance, the Chamber of Digital Chamber of Commerce, the Chamber of Digital Commerce, and IDAXA, to establish this joint working group that grew up to the time of our plenary just a week ago. There were 130 technical experts from all sides of industry. So that's from VASPs, from solution providers, regulators, academics, other financial institutions who were involved in or expect to be involved in virtual asset transfers. And they came together and we worked really week in, week out, literally every week, on a call pretty much from the week before Christmas and through to last week, when the final draft was actually approved. So we have a final text of a standard that has now gone back to the three industry bodies to endorse or adopt or themselves approve for use by their members.
Chris, from the perspective of your clients as an attorney, what were the critical elements that these stakeholders were hoping to secure from the standards?
I think in speaking with our clients, and also in the role that I play at the Crypto Valley Association here in Switzerland, and speaking with members as well, there wasn't necessarily an objective to achieve anything that goes above and beyond that which the FATF requires in its recommendations. It was rather more a hope that the standard is true to the nature of the FATF and not overly ambitious. And I think we achieved that. I think every effort was made by the group to transliterate, literally transcribe the FATF requirements and leave room eventually for the different virtual asset service providers to then expand if they want on the data model, but really to have a baseline that everybody can work together with, and then having that in place and implementing that in their own respective compliance programs. Each VASP is then free or can more easily work with the different technical service providers, understanding or knowing that they have a seamless and harmonized baseline set of data.
So, Chris, let me just ask you very quickly, how might this affect the interoperability amongst VASPs from a compliance perspective?
Yeah, I think it's a huge bonus. The fact that through the IVMS, VASPs will then be encouraged to gather the right amount of data or the right types of data in the right format, and then can use any technical means that they want, be it OpenVASP or any other one, Shift. There's a number of them on the market right now. Then knowing that these different technical solution service providers themselves are working on operating and finding ways to interoperate amongst themselves, everybody's working with the same quality data. It'll be easier to transmit data from one service provider to another, to the final end recipient. So it's a huge advantage for the VASPs themselves and for the technical service providers. It's a big boost.
We're almost out of time for this segment, I'm afraid. But just to sort of push the conversation forward, Siân, which countries, in your observation, have been quickest to put this travel rule into practice? And with this deadline looming next month, do you expect to see any stragglers, many stragglers? And if there are, what are the consequences?
Oh, that is a huge question, and I'll try and answer it quickly. The deadline, as it's sometimes been put across, is a bit of a myth at one level. It is a requirement that came into play all the way back in 2018, but it got defined in summer last year, and that has put FATF in a position where it wanted to see rapid development. And one of the reasons for the standard was to try and help that along more quickly to allow this to fall into place. But there will undoubtedly be problems, sunrising problems, as countries implement the wider range of FATF requirements, as well as the applying the travel rule to VASPs. And that is itself a massive challenge, because you'll have a VASP in one country that is required to comply, but a VASP in the other country that isn't required to comply. As these things go in FATF, and I used to be involved in policy groups at FATF, so I have some insight on this. It can take a matter of years for all countries. So you're talking about 200 nations around the world to implement the FATF recommendations in their entirety. But I expect that we will see over the next 6 to 12 months an increasing number. One or two have already done so. In effect, the US, Switzerland and Japan, for example, have already, and the UK have already made inroads. But the countries are implementing the legislation where they need to alter legislation, bringing those systems into place. And I think over the next 6 to 12 months, we'll see a sort of rapid rise in number of countries doing so, and that will then be sort of followed COVID-like by a sort of plateauing out, a high peak of other nations that follow suit, and then stragglers on the curve on the way down, anything up to possibly 6-7 years from now, I imagine.
It's going to be fascinating to watch. Well, thank you, Siân. Thank you, Malcolm. And thank you, Chris, for your informed perspectives on a complex and important problem. In a